Hey everybody, in this video I'm going to teach you how to take RSI data and convert it into price data using Excel. So why this tends to be useful is because a lot of people use RSI, and we see when we use RSI we can see that there is support and resistance, right? So there's support down here and there's resistance up here, right? And we can also see where RSI tends to like to accumulate. So it's usually around 50 is kind of like the area that RSI tends to like always come back to. But the unfortunate thing with RSI is that we don't know what price that is, right? So we know that eventually RSI will come back to 50, but we don't know what 50 is, right? So what we can do is we can use Excel to calculate a best guess of what 50 could potentially be with RSI. Now, when you're doing this, you have to keep in mind that RSI generally is going back 14 candles from whatever time frame you're on. So this is not going to be a pragmatic application on the smaller time frames. So in general, when you're doing this approach, you need to use the larger time frames. I say no less than 1 hour. Ideally, 4 hours to 1 day is like your ideal time slot to do this. For demonstration purposes, we are going to do it on the 1 day time frame. So what we need to do is we need to open up TradingView, and we need to make sure that we have our daily data open. Okay. Now we don't need anything else open, so we can close our RSI because we in order to make this work, we need to manually calculate RSI. Okay, and we'll get into a little bit why we have to do that a little bit later. Okay. So now that we have this, we don't even really need volume data. You don't really need this, but we're gonna just go with this. We're gonna come up to manage layouts, and we are going to export chart data. Again, it's kind of the same that we did in our previous video on using Excel to do a math-based indicator. What we're going to do is we're going to do ISO time, and we're going to export this data, okay? Now that that data is exported, we are going to go to our downloads. We're going to open up All right, so now that we have this open, we can get rid of what we don't need. So we don't need the volume moving average. In fact, we don't really need anything. So whatever you're doing RSI on is really what we need. So most people traditionally do RSI on the close price, but you can technically do RSI on the high price, the low price, the open price, whatever floats your boat, right? But we're going to do it on the close price. So I'm going to get rid of this, and all we really need to do is focus on that close price, okay? So because we need RSI, and we need Excel to calculate what a close price would be in RSI terms and vice versa, we need to manually tell Excel how to calculate RSI, because Excel needs to understand the formula in order to calculate the RSI, right? We can't just put the RSI data in from TradingView, because then Excel's like, well, how are you getting this number, right? Like, what are you doing with this number? What does this number mean, right? So in order to make this work, we have to tell Excel how to calculate RSI so that Excel can use that formula and make interpretations of where it thinks the close price will fall based on how to calculate RSI, okay? So to do this, what we need to do, we're going to put a column called RSI, because this is going to be our final product, okay? But in order to calculate RSI, the formula we need to do is we need to take the gains, the losses, and the average of gains over losses over a 14 candle period, or any kind of period that you want, okay? So we're going to make a column called gain, a column called loss. We're going to make a column called average gain and average loss, okay? And we have to think about what are we really asking, right? So what is a gain and what is a loss? Well, a gain is when the stock goes up in price, and a loss is when the stock goes down in price. So we need something to trigger Excel to know whether it's a gain or a loss. And how we're going to do that is we're going to make a variable called closed if. And starting from the second row of data, we're going to do sum equals this minus this, right? You understand what we're doing here? It's because we're taking today's close minus previous day close, right? If it's a negative number, then there was a loss. If it's a positive number, then there was a gain, okay? So now we need Excel to determine whether this is a gain or a loss. And it's really easy to know whether there was a gain or a loss because if it's negative, it's losing. If it's positive, it's gaining, right? So we need to tell Excel whenever it's a negative, it's a loss. But we need it to be expressed in a positive form so that we can average it, okay? And whenever it's a positive number, it's a gain. So to do that, if you remember from the previous video, we have to use the if function, okay? So we go equals if closed if is greater than 0, right? If it's a positive number, so it's greater than 0, we are going to put H3. Okay, we're going to put that value. But if it's a negative number, if it's less than 0, we're going to put 0. And there we go. And for loss, we're going to do the opposite. So if this is less than 0, then we are going to put this number. But remember, it's a negative, and we need to take the average of all of these. And if we're taking the average of a negative value, it's going to kind of mess it. It can cause problems. So what we're going to do is we're just going to make it simple, and we're going to convert it into a positive. How we do that is we just multiply it by -1. Otherwise, 0. Now you see the loss is 1255. So we're going to just drag this down. It's not going to let me. I have to manually do it. Okay. No problem. There we go. Okay, so now we get to calculate the average gain and the average loss. And we can get Excel to do that. But the first thing you need to ask yourself is what period you want your RSI to be. Do you want your RSI to be a 5-day period, a 6-day period, a 10-day period, or a 14-day period, okay? So what we need to know is what you want. What do you want, right? Because the standard RSI form is 14 days. Let's just stick with the 14 days. So we're going to come down to 14. Well, we're going to come down to 15 because this is obviously, actually, no, we're going to come down to 16 because this is blank up here, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So this is 14 days, okay? So then we're going to use the average function. So average, and we're going to do this. And then we're going to use the average function again. And then we're going to do this. And we're going to drag that down. And it's going to automatically calculate the 14-day RSI for each day period, okay? And then as a personal preference, I like just to reduce the decimal places to 2 decimal places. And there we go. So now we have to do one more step before we can actually calculate the RSI. And what that is we have to calculate the relative strength, which is just average gain divided by average loss is considered relative strength. It's really easy. Okay, so we're going to make a column called relative strength, RS, and we're going to use the sum average gain divided by average loss. And then we're going to send that down. Okay, so now we have everything we need to do the RSI. And to calculate the RSI, the formula is quite convoluted, but it is 100 minus bracket 100 divided by 1 plus the RS, and close your brackets. And there's our RSI. Okay. So we're going to send that down. And there we go. All right. So now you're asking, well, how do we calculate our price? So today was Friday. So today we closed, SPX closed at 3861, okay? We closed at 2779 RSI, all right? So if we want to do a visual representation of that, we can pull up RSI. It's not going to be identical to how TradingView shows it. So be sure when you're referencing your RSI that you understand that this is going to be a little bit different from how TradingView is displaying the data. So this is 27. It's fairly close though. It's close enough that I would be okay with it. 27, this is 35, okay? So we're thinking that we should see it come back up towards 50, or we think that it's probably, you see here how it went into the oversold. So on September 27th, it was oversold. So what we can do is we can go back to our chart and look for September 27th. So September 27th, the RSI was 25, right? Which is actually kind of perfect. Yeah, it's actually perfect. So because we're not quite there yet, right? Where are we? We're at 27. So we can expect SPX to come down to 25, right? Because that was kind of like where it is before we even really kind of got a bounce, right? So in order to see what the price would be if it theoretically were to come down to 25, what we're going to do is we're going to drag this down 1. We need to drag down this. Okay, so now Excel has the information it needs. So what we're going to do is we're going to do what if, goal seek, set cell F to value 25 by changing the close price. And then it's going to do the analysis. And there we go. So if the RSI were to come down to 25 on Monday, it would be a price of $3,725. So that is what we would expect the close price to be at an RSI of 25, okay? What if we expect the RSI to go up a little bit because it's a bit oversold, right? The RSI could go up to 32, right? From 27, 32 seems to be reasonable. So what if it goes up to 32 by changing the close price? Well, that would be a price of 3844. Now, did you see what happened here? Even though our RSI could theoretically come back up to 32, our close price is still below the close price we had yesterday on Friday, right? So you see how that works, right? Because you're expecting the RSI to go up when the stock goes up, right? But that's not how RSI works. RSI is over a 14 candle period. So people get misconceptions about RSI, right? They think, oh, this is so oversold. We should expect us to come back to, this price level up here, right? But no, that's not how RSI works. That's how RSI gets you. That's how I lost a ton of money trying to trade RSI when I started trading, because I thought, well, this is oversold. It's going to go up back to this price point to take it out of oversoldness. But you can see Excel's like, no. Hold up. No, if this goes back up to 32, you're still not retracing those high levels, right? So let's do a little bit higher. What if it comes back up to 50 by changing the close price? All right, so now we're getting somewhere. If the RSI were to come back up to 50, that would finally be above our previous close price, okay? Okay, so now the last thing that you can do, and it's much, much easier, is you can just find out what our RSI would be if we close at a particular price. So say you do some technical analysis or you do some other calculation and you think, okay, we closed at 3861. I think that, the next day we're going to close maybe around 3720 or 3780, okay? But would the RSI support that? Where would that put our RSI? So we could just easily, with this drag down, we just put in the number that we expect the stock to close at 3720. So we see if it closed at 3720 the next day, that would put our RSI at 24, right? And 24 is a very reasonable RSI. Okay. What about if we closed at, let's say we were going to be really aggressive. It was like a big news day. Let's say we're going to close right at 3000. Well, then RSI would be 10. Okay. But I want to show you one last little trick you can do to really help you. Okay. So we have our RSI plotted. What we can do, charted, really documented. So what we can do is we can ask Excel to plot the RSI. So if we click here and we go to insert and we insert a line graph, okay? We can plot our RSI. Now, why are we plotting our RSI? Well, because we can now see our RSI over the whatever period we want right in front of us, and we can see where the RSI likes to go. So here we can see RSI really generally finds absolute resistance at around probably 85. Okay, we can even click it, hover our mouse over it, and you see it says 85, right? 85. That's where our absolute resistance is on RSI. And we can find our absolute support right here, which is 12.4 is our absolute support. So let's say that we're going to close at that absolute low. So we go to data, what if, goal seek, let's say 13. 13 would be our absolute low. What would that look like in terms of a close price? And so that would be $3,222. So if we come back to the chart, if we look at the chart, we can plot that out, right? 3,222, let's draw the line. Coordinates 3,222. So no, it's obviously not going to happen, right? We're not going to go there. But it's just interesting that you can do this, right? So you can plot realistic expectations. Say you think we could come back down to this area of cluster support right here. All right. So that's, average is about 3,820. So we come back to here, we put 3,820. Well, that's an RSI of 30. So you see, we can still tank lower and raise our RSI. So it's really interesting. It's a really helpful tool to sort of put RSI into perspective. If you're a big RSI trader, then this is a very useful tool for you because you can understand kind of where to expect your RSI to go depending on like the previous trading history, right? So hopefully you found this helpful. It's really a really fun tool, and it's a really helpful tool too. Leave your questions, comments, and anything else below. And thank you again for watching. Trade safe, everyone.